Hey, welcome to World Code Updates. The news arrived quietly, but its impact was seismic. On August 22, 2025, CEOs across America opened an email from Global Affairs Canada. All export permits for lithium, cobalt, nickel, and rare earth elements to the U.S. were suspended, effective immediately. The world's longest undefended border had become an economic wall. Detroit's assembly lines for electric trucks stopped cold. Nevada's battery gigafactories fell silent. This wasn't a supply chain hiccup, it was a calculated move by America's closest ally. At first, many dismissed it as a mistake, but as Ottawa stayed silent, the reality set in. The lifeblood of the American economy had been cut off, markets panicked, lithium prices tripled, automaker and tech stocks crashed. The Canadian announcement was a masterstroke of strategic surprise, exploiting a vulnerability long ignored in Washington. For years, warnings about mineral dependency were brushed aside in favor of efficiency and trust in a century-old friendship. This was more than an economic dispute, it was a signal that the old rules of the US-Canada relationship were over. Canada, the quiet partner, had asserted its power in a way no one expected. The move directly challenged American leadership and its clean energy ambitions. Control of raw materials had become the ultimate leverage in global politics. The United States, long the world's rulemaker, now faced a powerful ultimatum from its closest friend. The era of easy assumptions was over. The impact on American industry was immediate and devastating. The electric vehicle revolution, the heart of US climate policy, stalled overnight. Without Canadian minerals, battery production stopped. Ambitious green targets faded into fantasy. The silence in factories was the sound of a dream dying. Silicon Valley too was paralyzed. Rare earths for smartphones, semiconductors, and military tech were suddenly out of reach. Production of fighter jets, medical equipment, and wind turbines was threatened. The crisis exposed a fatal lack of foresight. America had outsourced its mineral security, trusting the friendship would last forever. Tens of thousands of workers were furloughed within days. Investment froze, small businesses collapsed. The pain rippled through entire communities, especially in towns that had pinned their hopes on green jobs. The dependency on foreign resources had become a weapon, turned against the American worker. This was no longer just a supply chain issue. It was a national security emergency. The Pentagon warned of impacts on defense readiness. The ban revealed the soft underbelly of American power. Technological superiority meant nothing without access to raw materials. Canada's move proved that, in the 21st century, control over the Earth's resources could rival the power of any software or weapon. America's vulnerability was now on full display. Canada's decision wasn't random. It was the result of years of frustration and a new strategic vision. For decades, Canada played junior partner, supplying resources and support in exchange for security and market access. But new leaders in Ottawa saw dependency, not partnership. American protectionist policies, like Buy American rules, shut Canadians out of green energy projects despite deep economic integration. Diplomatic protests were ignored. To Ottawa, it was a betrayal. The mineral ban was a message. The US needed Canada as much as Canada needed. The US-Canada was leveraging its geological wealth to demand a new, equal relationship. The terms were clear: respect Canadian industries, collaborate on environmental standards, and share the benefits of the green transition. Canada wanted to move up the value chain, building its own battery factories, not just exporting ore. This was about sovereignty. For too long, Canadian policy had followed Washington's lead. Now, Canada was signaling it would pursue its own interests, even if they conflicted with its neighbors. The Northern Gambit was risky, but it promised a more independent, prosperous future. Canada was no longer content to be a resource provider. It wanted to be a power in its own right. The move risked a rupture with the US, but it was a declaration of independence. The world was watching as Canada redefined its place on the global stage. The Canadian mineral ban sent shockwaves around the world. Allies in Europe and Asia, also dependent on a handful of suppliers, scrambled to reassess their own vulnerabilities. Resource-rich nations in South America, Africa, and Australia suddenly found themselves courted by global powers. The global supply chain for critical minerals was being redrawn in real time. International institutions like the WTO were powerless. National security trumped free trade. Resource nationalism was on the rise, pushing aside decades of open markets. Canada's move showed that in this new era, control over physical resources could override any treaty. For the US, the crisis was humbling. Its allies were too busy securing their own supplies to help. The global chessboard had changed, and America was now playing defense. The rules of the game had shifted and the US was struggling to adapt. As the West scrambled, China and Russia saw opportunity. China, already dominant in rare earth processing, offered Canada investment and technical help to build its own manufacturing base, in exchange for long-term mineral access. Russia praised Canada's sovereignty and proposed new resource partnerships. The prospect of a Canada-China-Russia resource axis alarmed Washington. Such an alliance could control vast mineral, energy, and grain supplies, challenging the US-led order. The diplomatic freeze between Ottawa and Washington created a vacuum, quickly filled by Beijing and Moscow. This new alignment was driven by self-interest, not ideology. Canada wanted independence from the US, China wanted secure resources, Russia wanted to weaken the West. The Canadian ban became the catalyst for a radical reordering of global power. The world was entering a new era of resource-driven alliances. In Washington, disbelief turned to panic. Emergency meetings were called, lawmakers demanded action. The crisis exposed years of ignored warnings about supply chain risks. Finding new mineral sources was daunting. Reopening US mines would take years, and global competition was fierce. The US was late to the game, bidding against China for new suppliers. The crisis forced a reckoning with the costs of globalization and offshoring. Reshoring critical industries became an urgent priority. The government had few good options, stockpiles were limited, and sanctions risked pushing Canada further away. America's power had limits, and now it was being tested by its closest neighbor. Beyond the headlines, the crisis hit American workers hardest. Maria Sanchez, a battery plant supervisor in Nevada, summed it up. One day we were building the future, the next the factory was silent. Furloughs and shutdowns rippled through communities, devastating local economies. Small businesses suffered as workers lost paychecks. The green energy jobs that had revived struggling towns vanished overnight. Regional tensions grew. States with domestic minerals saw opportunity, while others faced collapse. Political speeches offered little comfort to families facing uncertainty. Anger was widespread at companies, government, and even Canada. The geopolitics were lost in the reality of lost jobs. The crisis exposed the fragility of the green transition and the real human cost of global resource wars. Silent factories became a symbol of social crisis and political instability. Diplomatic relations between the US and Canada froze. Communication channels went silent. Leaders' calls were tense and fruitless. Ambassadors were summoned for rebukes, as if the two nations were adversaries. Public statements hardened positions. Washington accused Ottawa of betrayal. Canada spoke of sovereignty. Each side clung to its narrative, making compromise impossible. The US demanded an immediate end to the ban. Canada insisted on a new, equal partnership. The dispute revealed a fundamental clash. America saw itself as leader. Canada demanded equality. Cooperation on security and intelligence was put on hold. Even NORAD, the bedrock of continental defense, was in question. The crisis was no longer just about minerals, it threatened the entire North American alliance. The deep freeze risked becoming a permanent break between two former friends. The 2025 mineral crisis will be remembered as a turning point, a signpost on the road to a post-American world. It ended an era of uncontested US leadership and ushered in a more competitive, unpredictable age. Military and technological might were no longer enough. Control over resources was now central to power. The US learned this lesson the hard way, at the hands of its closest ally. The future of the US-Canada relationship is uncertain: grand bargain, permanent rift, or cold, transactional ties. Globally, the crisis accelerated the rise of multipolar competition and empowered resource-rich nations. The world is shifting from a single US-led order to competing blocs and shifting alliances. The competition for resources will intensify, raising the risk of new conflicts and economic disruption. The silent factories are a warning. Strategic complacency is dangerous, and permanent friendships are an illusion. The world has changed. The question is, can the United States change with it?